Good afternoon, everyone. Thanks for joining us today. We have a presentation with Revival Gold. CEO Hugh Agro is here to give us an update and walk us through an exciting acquisition that they just recently announced. As always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's disclosure on their website. And there will be a Q&A section at the end, so feel free to enter your questions at the bottom. With that out of the way, I would like to introduce Hugh. Hi, Hugh. Thanks for joining us today.
Super to be with you, Deb. This is wonderful. Thank you.
So I think you're going to do a bit of an overview of what's going on with the acquisition, and then we can jump into some Q&A.
You bet. Well, welcome, and thank you all for tuning in to this update from Revival Gold. The last time we were with Adelaide Capital was, I believe, November 2020. We had just finished a PEA on our Beartrack-Arnett Gold Project located in Idaho. It was about 3 million ounces at that point in time. And today we're 4.6 million ounces of gold at Beartrack-Arnett. We've completed a PFS. And I'm very happy to tell you about this announced acquisition of Ensign Minerals. So cautionary statement here, which I would refer everybody to before we get going. And a bit of background as to why we're in this business in the first place. It's been a really tough last decade or so for investors in the junior development space, junior exploration space. But I think the setup is outstanding. Here pictured are blue bars representing the pace of global production, and in gold bars, the pace of global discovery, and that's before we get to permitting and construction of new gold mines, new sources of production. And you can see that there's a large and growing gap, and all this against a backdrop of a growing gold price. So a really good setup for being a developer of gold projects. At Revival Gold, our strategy is somewhat unique. We've really focused on brownfields sites where gold has been mined before. And we've seen the success of that at Fosterville, at Malartic, at Deb Gold Strike. And so that's the path that we've chosen. But what other things that come with that, of course, in a lot of opportunities for additional infrastructure that come with those brownfield sites, and with a smoother path through permitting and construction, more capital efficient. So this is our approach to things. The other thing that's different, I think, somewhat from others with Revival Gold is we've borrowed from the Australian model. We're taking a phased approach to the development of our projects so that we're more efficient with our use of capital, and so that we can build an organic pipeline for future production. We have been looking at acquisition opportunities. We've looked at over 150 different opportunities over the last 5 or 6 years. And this one in particular, we've been looking at for over 3 years, and the timing just worked out perfectly for us. And we announced the transaction on April 10th. I want to talk firstly and just quickly review the Beartrack-Arnett project, which is our founding asset. We knitted together the land position in the eastern side of Idaho to put this project together. There's a lot of images and data on this slide, but really the important thing to point out here is that we've got a PFS on this brownfield site, which you can see pictured at the bottom left of the page, existing infrastructure that we can take advantage of. And that PEA, that PFS points to a 24% after-tax return project at $1,800 gold. It's a relatively modest scale of production, about 65,000 ounces a year of heap leach gold production. But we've got a very large resource here, 4.6 million ounces, and lots of opportunities to expand on that, especially in the mill scenario as we look at the underground potential in this ore body. The pictures at the top right of this slide describe some of the geology. On the left, you can see a plan view image of the orogenic gold system strike of this fault structure, which hosts most of the mineralization. Pictured in red is the existing mineralization that stretches over 5.5 kilometers of strike. To the south, We've got another 5 kilometers of favorable strike in this system, and the deposit is open. It's open at depth and it's open along strike. And you can see pictured on the right, the last section in our drill plan with lots of really exciting grades there, 10 to 14 meters, 6 to 10, 12 grams in a vertically orientated, steeply dipping, consistent gold system. So lots of potential to expand on this project at Beartrack-Arnett. We're really excited about what the first phase brings to us, and we're marching that through the re-permitting exercise. As we think about becoming more relevant to larger institutional investors, and as we think about growing our business for value, we lined up on that strategy that I talked about at the beginning with Ensign Minerals. Ensign's a private company. It's pulled together in much the same way as Revival Gold pulled together on its Beartrack-Arnett project. Ensign pulled together the Mercer project. This is in Utah. It's about a 14,000 acre land position, much of it on private ground, which has huge advantages in terms of re-permitting. The resource, 1.6 million ounces of 0.6 grams in oxide, which is amenable to heap leach, and which we're going to march forward into a PEA. The other thing that's really exciting about this project is it's one of the very first Carlin-type deposits identified in the Western United States, and we see tremendous opportunity for additional exploration beyond the existing 1.6 million ounces. Importantly, again, common theme with what Revival Gold has done in terms of putting together a land position in Idaho at Beartrack-Arnett, this project has a power line to site, paved road into site. There's accessible water with water wells nearby, and it's very nice location for construction of a heap leach operation. In other words, the topography is very amenable to an operation. We're really excited about this project and what it brings to Revival Gold. In particular, it increases our heap leach gold resource per share by some 63%. The combined company is a leading pure play Western US gold developer. I say pure play because we're 100% gold. This isn't a gold equivalent situation. For those investors looking for exposure to the gold metal in a good location, this is it. 2.4 million ounces of M&I, 3.8 million ounces of inferred, target heap leach production of 150,000 ounces from the combined projects in a phased approach, which is capital efficient. I'll come back to that in a moment. Lots of exploration opportunities at the orogenic gold system that we have at Beartrack-Arnett, and with this Carlin-type deposit that we have in Mercer. I want to emphasize as well that this transaction is extremely synergistic. The phased approach to development means that our engineering team will move over to Mercer to take this through to a PEA while we progress permitting at Beartrack-Arnett. Meanwhile, our exploration team will be looking for opportunities to add to resources, build and qualify exploration targets at both Beartrack and Arnett for the future. Here's a picture of that pro forma business in terms of the resource. On the left side of the page, you can see Revival Gold with 1.1 million ounces of heap leach resource, Mercer with 1.6 million ounces of heap leach resource, the combined business at 2.7 million ounces of heap leach resource, a better than 2 times increase with the transaction. On the far right of this page, you can see the breakdown of resources in total. At 6.2 million ounces of gold, that makes us the 3rd largest Western U.S. gold developer, with some very good peers ahead of us, and that brings attention to the business at Revival Gold. It presents opportunity for us to continue to grow our business, and it gives us a very exciting pipeline for future production potential. I talked a little bit about synergies, and the location of these two projects, the proximity of these two projects is key to that. These are very similar jurisdictions in terms of the operating environment, same time zone, 6 hours drive apart. In fact, our VP Engineering and Development, who will head up the engineering on Merkur and is leading our engineering and development works across the company, is equidistant between these two projects. We've got people based in Salmon, Idaho. We've got people based in Tooele, Utah, which means we're on the ground on these projects. And I should emphasize that Revival Gold has got quite a role to play in what the industry groups are doing in the United States. We're hugely supportive of the AEMA, the IMA, the WMC, all of these entities that are working to advocate for mining in the Western United States. I'll come back to the Merkur project just for a couple of moments to talk about that exploration potential. I explained how at Beartrack-Arnett the deposit is open and how we've got these opportunities to continue to grow and obvious drill targets. We've got that at Merkur as well. Picture here is a 14-kilometer long line in the middle of the property diagram, which just shows you the historical extent of the Carlin Trend. And at Beartrack-Arnett, our property position is about that same size. And we've got similar geological aspects, of course, this being a Carlin type deposit. The historical mining at the Merkur project amounts to some 3.5 million ounces of gold. The current resource shown outlined in red outlines here at Merkur Main and down at Merkur South. We've got a whole second limb of the anticline that makes up this property position, pictured here in a figure that Dave Reeves put together, that hasn't been fully explored. There's a couple of drill holes into it that Ensign's made, which have hit gold mineralization, and we're really excited about getting out and doing further work with respect to that. In the main Merkur area, as we go through the various different sequence of rocks, the drilling to date shows that there's lots of potential to continue to expand at depth. Beartrack, or Barrick, I should say, when it was operating here, operated both a heap leach, run-of-mine heap leach operation, a CIL plant, and they also had a small POX plant here. And we know that there's sulfide potential at depth, which is another interesting and exciting exploration opportunity for us in the future. Our initial focus here is going to be, first and foremost, to complete a PEA, a preliminary economic assessment, on the Merkur project. In support of that, we're going to be doing column leach test work over the next few months, and we'll be taking all of the historic drill data, drill logs, and metallurgical information. We'll be getting that into an electronic database in order to build up a better geological model for the deposit and to de-risk and look for opportunities to improve on the potential value as we head into that PEA, slated for completion by the end of the first quarter 2025. At Beartrack, we'll be continuing to progress the permitting. We're about 3.5 years to go until we're ready to turn a shovel at Beartrack, including all of the NEPA work that needs to be done and the baseline work and the completion of a feasibility study. So we'll tick that work along. And in the meantime, we think, given the private land position at Merkur and the fact that it's a very arid location, which makes our process of permitting much simpler, we can actually move that project to production first. So as we think about the phasing of the development of Beartrack-Arnett and Merkur, Merkur will now take the forefront. It will be the project that we move first into production. Phase 1 would see us at somewhere between 80 and 100,000 ounces a year of heap leach production from that initial 1.6 million ounce resource. We'll then, in the second phase, bring on Beartrack-Arnett's heap leach restart project. That's another 65,000 ounces a year of gold production. So the combined production opportunity from heap leach is in the order of 150,000 ounces a year. That's our target for heap leach. And beyond that, we see potential to go into the underground. and produce a concentrate for sale, which would take us up to a combined 250,000 ounces a year or more. Of course, we have opportunities to continue to expand beyond that. We've got a large open pit resource at Beartrack, and at Mercer, we have those opportunities to continue to expand. So lots of potential to continue to grow the portfolio of production beyond. And I should emphasize, these are relatively capital efficient steps along the way. We think the capital on the first phase with Mercer is going to be less than a couple of $100 million. At Beartrack-Arnett, we know that the first phase there is going to be in the order of $109 million. And for the underground, as we contemplate what we want to do there with a 2,500 ton a day underground project and a concentrator which ships concentrate for sale, that could be in the order of just under a couple $100 million as well. So these are capital efficient steps to grow production in a meaningful way. I'm going to wrap up here pretty soon, but just want to describe the pro forma company as we think about this coming together. It's an all-share transaction. Ensign shareholders will own 35% of the pro forma Revival Gold, pictured on the left figure, 65% to the Revival Gold shareholders. Then we layer on a $7 million financing, which will be about 11% of the pro forma company. We're just wrapping up the books on that today, and feeling very good about that raise with shareholders on both sides of the transaction participating in the raise, and some really complementary fit there. Got a couple of new shareholders coming in from the Ensign side, which are value-add institutional investors for our pro forma company going forward. The pro forma number of shares outstanding, 196 million, pictured on the right, fully diluted 239 million. So as we think about the pro forma market cap, 69 million, $70 million pro forma market cap, trading at about $7 an ounce in the ground, relative to the peers, which we see trading at $10 to $15 an ounce in the ground. We think there's some really good value in the stock post this transaction, with important milestones along the way. Just looking at that valuation to put it in context, here on the far left of this slide, trading at $7 an ounce in the ground, we see some really good opportunity to make money for our shareholders with this transaction, which of course is the primary reason we're in business. We're of course doing some really good work in our local communities, and they are very happy with all of that, with the productivity and the prospects. But what we're doing with this transaction is building a larger, more relevant, more value add per share company with potential for a 3 to 4 times re-rate based on these peer multiples. I'll pause. I want to say something about our team just before we end here. First of all, non-exec chairman designate Tim Warman, an absolute star in the business, was the leader of Fiore Gold, which was sold to Calibre recently, another U.S. development company. So lots of experience in the U.S. with development of heap leach gold projects. Rob Chose, former CFO of New Gold, chair of our audit committee, former colleague of mine from Kinross Gold. Wayne Hubert, the founder of Ensign, but also the former finance director of Beartrack-Arnett, member of our board for now some time. Wayne's claim to fame was, of course, building up Andean from a $100 million market cap company, which was ultimately sold to Goldcorp for $3 billion. Maura Lendon, former chief legal officer with Hudbay. Norm Pitcher joins our board, former COO of Eldorado, joining from the Ensign side. Of course, Larry Radford, an Idaho native, mining engineer, a wonderful guy, former COO at Hecla, among many other things. Our VP Engineering and Development, John Meyer, Lisa Ross, our CFO, and myself, very lean and efficient team at Revival Gold. We keep our burn low and our focus on results. That's the summary here with this Ensign acquisition at Revival Gold. We're creating a leading Western U.S. gold developer, pure gold, I should emphasize, with a target 150,000 ounce a year gold production, meaningful market cap, excellent valuation, synergistic transaction, all in a good geographic location. Thank you so much for listening to the presentation. I'm sure there's some questions that folks will want to ask, and I'm available to take them, Deb and Magda.
Thank you for the overview. So just a question with kind of gold prices being where they are and the timing of the acquisition. If this was, if this has been something that you've been working on for a while, can you give us a bit of a background on the timing?
Yeah, so as you think about corporate development generally, I'd say there's three buckets, right? You're either a buyer of assets, you're a seller of assets, or maybe you're looking at some kind of a hybrid joint venture strategic investment scenario. And we think in this environment, it's a time to be buying. So by accumulating these assets and doing so at such great valuation, it's actually accretive to our shareholders, and it creates more leverage and upside for the gold run on developers that we see to come. I think this is an opportune time to be transacting. The gold price has moved. The equity values have not. So we're a buyer. We're not a seller.
Got it. Thank you. And then you've mentioned that permitting at Mercur is easier because of private land. Can you give us a bit of a background for someone who's not super familiar with U.S. permitting, how private land makes it a more streamlined process?
Well, the big difference is that public land, where most mineral rights in the Western United States lie, requires a federal process for permitting. That's NEPA, the National Environmental Protection Agency. And there are very complex steps that one has to go through just as a result of the fact that the mining law dates from 1800s and that there's so much history of rewriting of policy and procedure. It makes it more complex and very onerous. On the other hand, on private land, a developer of a resource project is still required to go through a rigorous permitting exercise, but it's with the state agencies, and there's less bureaucracy around proceeding with those initiatives. So in our case, we're dealing with Dogam in Utah, a very constructive, business-constructive state government that understands the benefits of responsible exploration and mining, much like Idaho. And the other thing, apart from just being on private land, remember, this is also a very dry location. And water is fighting words in the United States, especially in the Western United States. So if you can avoid water and all the requirements around baseline study for groundwater and underground water, you'll save yourself a heck of a lot of time. And there's this advantage as well with Mercur.
Got it. Thank you. And then we have an audience question about gold recoveries. When you're talking about gold production, are you talking about recoverable gold? And because it looks like recoveries were in the 60% range.
Correct. Recoveries on both Beartrack-Arnett and Mercur heap leach projects are about 65%. And yes, our target production for heap leach is 150,000 ounces of doré gold, so recovered gold.
Got it. So those 1.6 million ounces produced, well, that was all from a heap leach type of operation at Mercur?
Correct. It's an oxide resource. It's an inferred resource with really tight drill spacing. So we're feeling very confident about the resource tenor at 0.6 grams per ton gold. We are in the process of getting started with column leach test work. There's been a lot of historic test work done, but we want to now move from the historic process of run-of-mine leach and bring our recoveries up and potentially improve on what's forecast in the current technical report at 65% by doing column leach test work and looking at different sizes of crush. So we're underway with that work now. Again, this will all dovetail into a PEA by the end of the first quarter 2025.
Thank you. And then I think the press release mentioned that water rights were held by the county. So what would need to happen to be able to take water for an operation from there?
Yes, so these are water wells that were built by Barrick Gold as part of the original Mercer operation, and then gifted back to the county. And the county isn't currently using them, and our understanding is that they are willing to work with Ensign Minerals and Revival Gold to allow access for future water use. And it just makes sense for the county, of course, because they're very interested in bringing jobs back to this part of this neck of the woods, and there's no other use for that water. And in fact, we can find lots of ways to collaborate with the community. I mean, we've got a paved road that comes right into our project, and there's quarries along, gravel making operations along that road. Possible collaboration there. We have a power line into site with a 460 kV transformer on site, and so we can find ways to, once we're on the site and working with power, to potentially create other opportunities for folks in that neighborhood once the line is energized for others. And so lots of collaboration opportunities, education, community support initiatives. This is kind of an interesting opportunity for us, and it's something that we've done very successfully at in Salmon, Idaho, where we're located with Beartrack-Arnett, sponsoring the local hockey rink, being part of the business association, helping to drive local jobs and local business activity.
And then you touched on exploration. I think at Mercer, it's like something like 3,000 drill holes were drilled in the past. What was the focus of all that exploration?
Well, the 2.6 million ounces of past production, I've got to guess. And I think, too, that a lot of that drilling leads to opportunities in this current climate, right? The mine at Mercer was shut down when the gold price was $300 an ounce, and here we are, more than 8 times that level. So lots of opportunity to take that data and develop up geological targets for future drilling. Not a lot of work done in the underground in the most recent decades, but back in the 1800s, there were underground silver mines in this location. This is a very prolific district. Of course, Bingham Canyon is here. We've got one of the world's largest copper gold producers, a couple other gold mines in the same belt of rocks. And I think that drill data is opportunity for us. And if you think about the replacement value of 150 kilometers of drilling today, that's plus or minus $60 million of replacement value for RC drilling today.
Got it. Thank you. And then you touched on planning to complete a PEA in Q1 2025. Do you have a general sense of, once that's achieved, how long it would be before you get to a potential construction decision at Mercer?
We've had a preliminary look at that, and that's one of the reasons why we're so excited about this project and how it dovetails with what we're doing at Beartrack-Arnett. As I mentioned during the presentation, Beartrack-Arnett's about 3.5 years out. We think that Mercer will come in less than 3 years from now to a point where we can turn the shovel on construction. We've got a lot of steps to go through, it's true, but we're working on a brownfield site. We don't have to worry about linear permitting items like roads and power lines and bridges that stall projects. And we've got inexpensive power. We've got lots of labor, no requirement for a camp, very straightforward site. It's true that at Beartrack-Arnett, we already have that gold plant, so that makes things even easier from a construction point of view and a CapEx point of view. But at Mercer, the flip side of it is we start with a clean slate. We can size the operation for what's optimal for the resource, and we have a really nice building site location there, and again, that private land, which makes things much easier to progress.
Thank you. And then touching on Beartrack-Arnett, so you completed a PFS last summer, I think in July. Can you remind us of like the scope or the size of the operation that you're focused on at that project?
Yeah, it's 12,000 tons a day. And I want to come back to the point I made earlier. We're not starting with a clean piece of paper at Beartrack-Arnett. We've already got a plant that's scaled for 12,000 tons a day. That was the prior operation. And so the benefit of that is we don't have to go through figuring out how things will work. We know we're going to be using 100-ton trucks. We know it's 12,000 tons a day. We know we're going to produce about 65,000 ounces a year. We know what the recovery is going to be. We've got lots of data on that. And so that makes the project relatively low risk. And it also means we don't have a lot of earth moving in the schedule. We don't have to build foundations. We don't have to put roads in and bridges and so on. And so that makes the project much more straightforward in an execution point of view. It's most of the capital is associated with equipment and construction. So 12,000 tons a day is the answer, and that's a benefit for us. And as I'm suggesting to you at Mercer, we're not constrained to that 12,000 tons a day because we don't already have a plant there. We think we'll be doing something in the order of 2 or 2.5 times that scale at Mercer. And
then touching on exploration at Beartrack as well, there's a lot of targets, and I believe a couple of weeks ago you had a press release about one. Can you give us a sense of what the exploration focus, if any, there will be at Beartrack in the near term?
It's tough when you've got open targets or open deposits and lots of targets. Last year, we intersected 20 meters of 4 grams close to surface in oxides at our heap project, and we're itching to get back into there. Of course, every year of mine life that we add to our heap leach project is, $30–40 million of free cash flow at $1,800 gold, and it's quite a bit more at current gold prices. So those are high-value targets. But I think the spot that we're most interested in, now that we've got a positive PFS for that heap leach, and we can march that forward, I think the place that our team's going to want to drill next is that continuation of the main strike trend at Beartrack, where we've got another 5 kilometers of strike, open deposit, high grades in the underground. And they've been working over the winter months on structural modeling, interpretation of the geophysics. As you saw, and as you just have mentioned, we increased our land position to the south. We're going to get out in the field here very shortly with the snow clearing and be out mapping, and we're doing further work to validate and qualify those targets for future drilling.
Thank you. And actually, one more question before I hand it over to Deborah. An audience member is asking if there will be any drilling in 2024.
We don't have anything currently planned. With 6.2 million ounces of resource, we feel that we've got enough to move the projects forward towards free cash flow, and that's the emphasis and the focus. And the other thing is, I think there's an opportunity for us to get out and tell the story around what we're doing, and for these gold stocks generally to re-rate before we go investing a lot more in drilling. At $7 an ounce in the ground and a finding cost even as good as it's been for Revival Gold and Ensign for that matter, running at about $6 an ounce in the ground, you could see a possible financing to go spend on drilling. But we think the margins need to be a bit better before we do a whole lot more drilling, and/or we've got a partner or some other arrangement, strategic arrangement that makes sense. Meanwhile, we can continue to qualify the targets, build up our business case for future drilling, and the team has a ton to do in terms of just compiling all the data that we now have at Mercer. The initial focus is on that existing 1.6 million ounces of gold, and using our skills with hard copy data, drill logs, geochem data to de-risk the existing resource.
Okay, great. I've got a couple audience questions, Hugh, and then I've got a couple of my own. So starting with the audience ones, how much CapEx would be needed to get Mercer going again?
We think it'll be sub 200 million.
Okay. And then how much money do you currently have?
Currently, we're at about 8 million pro forma the financing.
Okay. And then a couple from me. So project synergies, can you give us a little bit more detail on the expected cost savings from the acquisition?
It's difficult to put a number on it, but Ensign is a private company. And so if you imagine them going public as an individual company, they'd have to take on the burden of being a public company, which is, in the order of 1.5 million to some of our peers spend, 5 million a year on just being a public company. And so lots of synergy from that point of view. Our G&A run rate is about $150,000 a month, or $1.8 million a year, $1.5 million a year, so at the lower end of the spectrum. And then, as you think about the synergy, just imagine the synergy in terms of having the experts working on things like permitting, engineering, geology, lots of overlap here, and opportunity for cross-pollination, all within the same jurisdiction. Very similar projects. So we get a lot of synergy from that point of view in the team. We're not bringing on any new bodies here for management. It's relatively straightforward. And because of the fact that it's a private company, the costs associated with doing the transaction are also relatively low as we think about bringing them together.
Talking about overlap, there is some overlap in the Revival and Ensign team managements. How did this impact the acquisition?
The overlap is a common director, and I'll tell you, it gives us a lot of comfort to know that we've got somebody of the quality and the pedigree of Wayne Hubert having oversaw putting this package of land together, and the works that have gone on there, and the team of people at Ensign. Some super people have been involved with this project, going back to some of the original Barrick geologists that assembled part of the land position, and some of the folks who've been working on it, like Dave Rees of late. So that actually gives us a lot of confidence, and you cannot possibly see everything during a due diligence process, but what you can do is know the people on the other side of the table with you, and if you trust them, and if you've had past experience with them, it makes the process a lot smoother. So it was really helpful.
Right. One last question for me. I don't see any other audience questions. So audience, if you want your questions answered, you better get them in quickly. My last question, Hugh, is what can we expect to see over the next 3 to 6 months in terms of news items?
So the first thing we're working on is that metallurgical testing, column leach testing for the Merkur project. Samples are already in at the lab, and we'll get those underway shortly. We're also working at that geological modeling to de-risk the geological resource, and we'll look for opportunities for future drilling, so stay tuned for that. And then as we think about the broader land package and the exploration opportunities, we've got some really super guys leading the charge. Dan Pace, our chief geologist, bringing a lot of science to the integration of data sets into a common format and looking for target opportunities. So we'll certainly be saying something about that work. John Mayer leading the charge on our PEA. John's an outstanding engineer, has done a great job with Revival Gold on bringing the Beartrack-Arnett project to PFS, together with the rest of our team, Steve Priestmeyer on the geology and the QA/QC, Pete Blakely on the mining and the planning and the modeling. We're really excited about what that team can come up with. Of course, at Beartrack proper, we're going to continue with the exploration. We've got lots to do out in the field in the spring and into the summer months. And look, I think with this rising gold price and the recognition that there just aren't a lot of quality gold projects in good quality locations like the Western U.S., I think we're going to see a lot more money coming into the sector. And I think we're going to see some drilling and lots of future development. I think McKinsey came out with a number of like $86 billion worth of development required just to get those future cupboards restocked with gold producing projects. And when that money comes together, we've got the projects for it. We're in the Western United States. We're third largest developer, huge resource to start with, and lots of exploration opportunity beyond that. So this is the place you want to be positioning. At $7 an ounce in the ground, I think we got a ton of upside from here.
All right. I lied to you. We've got some audience questions now, Hugh. So is 200 million financeable for a company of your size? Would you need to offer an NSR, or how would you plan to finance
Yeah,
CapEx?
thanks for that question. There are lots of opportunities to finance in the Western United States, everything from lease opportunities. In fact, the CAT operator is in Salt Lake City right next door to us, so I'm sure they're going to want to deal with us, as too is Bort Longyear. So lots of opportunities for equipment and potential equity participation from suppliers. We've also, of course, got a plethora of royalty companies. They too are looking for ways to fill their portfolios with producing assets. They're competing amongst themselves with excruciatingly low costs of capital for asset opportunities. And we've been very careful about that. We haven't done any royalty transactions or stream transactions. In fact, we bought back an NSR last year on our Beartrack project because we saw a good opportunity to improve on our land position. But down the road, those are definitely options for us. And, as we think about capital, in the big scheme of things, many mining projects today are not 100 million or 200 million. They're typically 500, 600, 700 million, and they typically go over. And so I've tried to explain how this is a company that under promises and over delivers. We did that with our PEA. You'll recall when we did our last presentation with Adelaide Capital in 2020, we talked about $100 million of capital for a PEA. 3 years later, we put out our PFS, and it was $109 million. Actually, the comparable figures are 107 to 109. My point is, we really do a good job on the engineering side, led by John Meyer and his team and our consultants, and we're really focused on driving value. So we try and stay away from those risky projects that can escalate in the cost, and we try and stay in a snack bracket that fits for a company our size, and absolutely 200 million in the Western United States is doable.
And what do you think the biggest risk going forward is?
The risk for us is the capital markets, and we've seen what's happened over the last 10 years as resource companies, development companies have struggled for capital. Our approach is keep costs low, spend money for near-term payback, and where we see opportunity to position ourselves for the inevitable chase ahead, we've done that. And I think that stands well for our shareholders. We're about 50% institutionally held, some really strong supporters there. But we're very careful with the way we spend our money. And I think having been in those corporate shoes before when the gold price is running and everybody's looking for a way to get exposure to the metal and find the next development project, I think we're going to be a go-to name in the United States with a couple of really high quality and exciting projects.
Agreed. Well, I think that's all the questions we have for you today. Congrats on the acquisition. Really meaningful. I think that's what the market's been looking for, is companies to start consolidating in a logical way. And I think it's great to be in the US. I think it's exciting times for Revival. Anything you wanted to talk about today that we didn't cover, Hugh?
We covered a lot, Deb. Thank you so much, Adelaide Capital. It's a really important part of the community to get the message out, and we really appreciate the interest from your audience.
Yeah, always a pleasure, Hugh. Looking forward to doing some in-person marketing in the US in the coming weeks. So should be good. Get the story out, get some domestic shareholders for you. If anyone has any questions or would like a one-on-one meeting, feel free to reach out and we'd be happy to have that arranged for you. Thanks everyone for participating. And Hugh, thanks so much for your time.
You bet. Thanks all.
Bye.